Hey, good evening, everyone. Welcome back to the channel. So I want to do a portfolio review again this evening and anticipate the next week of trading. We'll look at some macroeconomic news coming. I'll tell you all about a very successful options win that I had this week that was actually very easy to do and was the most certain I've ever been on an options trade, which resulted in a quick, basically $1,000 gain, which is pretty awesome, like printing your own paycheck, basically. Always good when we can do that. And I want to go over some of the total returns for some of the key YieldMax funds because I see a lot of you talking about like Misty and some of the others like Coney, how you all are wanting to put a lot of money into those. So I want to look at the total return of those compared to the underlying and, just have us all kind of look at it with a level head. Of course, that's what I'm here to do. So first, let's go look at the dividend portfolio with Schwab. And I've actually thought I may consider moving to another broker. I may actually consider moving this account to Fidelity because, I mean, I'm not all that happy with Schwab at the moment. Again, August, as the dividend portfolio here, August was the best month so far. September, we're going to be close to where we were in August, probably a little slightly lower. And then, of course, the dividends come from these funds here. Most of them, so there's AT&T, JP Morgan. These stocks pay the most dividends of this cluster of funds here. And then we've got some other growth stocks here that pay some small dividends. So 80 off of 85,000, there's 1,000 in dividends here. But of course, the bulk of the dividends come from Tesla, SQY, Clip, MSTY. Coney's still not updated yet. I don't know what they're doing. Let's see if they've changed uh, any of these to weekly, because YMAX and YMAG officially have paid out weekly. So let's see if they've changed this. Nope, Schwab is really slacking on the job. This is another reason why I actually want to move from Schwab because they're just not very good. This should have been changed to weekly because they've already paid out a weekly dividend as of last week. So it's like old news at this point. Here's some options I'm currently in. 2 NVIDIA positions, a high tie and an MSOS. And I'm actually accumulating some cash here. So as far as dividends, Beto, Ulti, YMAG, QQQX, QQQY, QDTE, XDTE, FEPI is one of my favorites. So what I want to actually show you all fine folks next is on my realized gain and loss. I'm going to go deep into the playbook here. Oh, welcome. Okay, so if I go into the playbook here, let me show you all for the year here. I'll just be transparent with you all. Um, this is my gain and loss for the year so far. Let me go to the individual account. I've had some doozies at the beginning of the year, but let's do this first here. So let's see. Oh, here we go. Okay, what I want to focus on are these here. The JEPI and the QQQY were reverse split, so I couldn't do anything about those. But since August, I've been on a win streak here. TQQQ closed out a nice profit here on the 13th. Starbucks, of course, closed out a profit. NVIDIA sold out of the stock close to the peak. Apple, this is my biggest win of the year. Paid like $343. Made this much. TQQQ, and then TQQQ. This was the big win this week. I only held this for like 2 days, but I knew this was going to work, and I've actually never been so certain on a trade. And let me explain why. Because this past week, we had the Fed announce that they were cutting interest rates. Um, and we knew this news was coming. We were expecting like a 25 basis point, which is a 0.25 or a quarter of a percent reduction. We ended up getting higher than that. We got a 0.5% reduction. So I go to the site called Forex Factory and I try to stay abreast of the news here as far as macroeconomic news. So I looked from last Wednesday and Thursday. I looked when they announced that they were going to actually cut the rates, and I knew it would be a big boost for the Nasdaq, and especially I knew all the indexes would do well, but I had a strong feeling that the Nasdaq would do best. Um, and I pay attention to that because I can see the newsworthy events right here. See, at 2 o'clock p.m. on the 18th, we had the Fed funds rate. Now, the funny thing is, so I bought this like a day before. I bought this on the 17th, and I was closed and cashed out of it by the 19th, had my gains posted, and the rest is history. But you can see here the actual previous 5.5%, the actual current Fed funds rate is 5%, which is down 0.5%. So this news came at 2 o'clock on the 18th, which was Wednesday. The Nasdaq didn't move a ton that day, but the next day it moved up like 500 points. So then I decided to close out of it. And then by Friday, I could have actually held till Friday or even longer, but then I saw that the Nasdaq dropped. So if I was going to really be greedy, I would have actually gotten puts on the TQQQ the next day. Because remember, with the triple leveraged fund, you're accelerating your gains or your losses 3x. It's not exactly 3x, but it does do better than just like a 1x. But anyway, so this is what I follow. So for the week coming up, oops, the week coming up, the news that we're going to have that's going to move the markets, we've got manufacturing data. That's not going to be too much of a movement unless it's like shocking news. We've got consumer confidence on the 24th. And then we've got some crude oil inventories, home sales, unemployment claims on the 26th, the revised GDP. Papa Powell speaks on the 26th. So Powell tends to move the markets when he speaks. So this could be, we don't know the direction it's going to go, but this could be pretty big. I would actually expect with him speaking, he's good at kind of massaging the markets upward. So I would expect the markets to do very well when he speaks. So I might even get back into TQQQ, some call options there, and some of the other indexes too. And then, of course, Friday we have core PCE. So that's that. I wanted to cover some of the welcome. Let's see what we got here. I'm going to keep Misty, Tesla, NVDY, run the inverse fund, and I love Sand Shore. Love YieldMax, how to catch profits on the upside and downside. Yeah, sure. Okay, so with that being said, I want to look at the total return of some of the funds here because I want to caution some of you all that are looking to go all the way, like all into like Misty. Coach is a YieldMax hater since he's still, well, that's true. As we established in the poll that I put out, and if you haven't voted in it, definitely do. But we've proven the only way to not be a YieldMax hater is to get margin called. So that hasn't happened to me. So that is actually unequivocal proof that I must, in fact, be a YieldMax hater, right? You got to love the YouTube standards. Work hard, invest harder. I like that name. Maxi ETF is a long-term gem. Oh, thank you for reminding me. I haven't looked at that one in a while. Okay, so let's go over here. Let's go back to Seeking Alpha. Still, Seeking Alpha's kind of become the new Yahoo Finance, what Yahoo Finance was last year. A lot of you got annoyed that I kept using that. So let's look at Maxi really quick over here. The Bitcoin Strategy ETF. This was doing even better, I want to say. Yeah, see, we were up like 154%. That was the time to cash out, was here. Okay, let me look at, try to stay on point here. Misty for the year. See, we were up like, look at this. This is insane. We were up like 104%, but we've basically crashed. Look at this. We went all the way from being up to being down. I mean, I get it. What goes up must come down, but this is like, oof, this is, look where we were and where we are. See, not good. So I would definitely, well, we have to focus on total return here. So I want to focus on some of these here. So total return, we've got price. Oh, I like how this does this. Look at this. It gives me both. Price return versus total return. See that? So total return still 83% because of the dividends that it's paid out. Let me add a couple more. Let me add Coney. Because I just want to caution you all against, going all in on some of these. Not because I'm a hater, but it's more like being a realist. So in terms of price return, a lot of these are way down. Let's do the golden egg here, NVDY. Let's do this one, and let's do like a Appley. So here's 5 of them here. Okay, so if we look here, some of these are up. NVDY is barely up since a year. Appley slightly down. But if we look at total return, the crown jewel, except for Tesla, these are all way up. So in terms of total return, it's a pretty good total return for a lot of these funds, but I still would caution, these don't work like typical funds, like a growth stock where you're wanting to dollar cost average. The same concept. Some of you are trying to apply growth principles to dividend investing, and that just doesn't work. Let's see. Too bad K is not on. Like to make fun of him. He got roasted pretty good in the Cash Flow Kings yesterday. Oh well. A lot of you all think he's such a nice guy, but I'm convinced otherwise. Keeping it real. That's why I like the coach. Hey, I'll always keep it real and fun on here. Anyway, so yeah, that's what I'm saying. I would just caution if you all are wanting to dump a ton of money in, growth principles do not work for this type of dividend investing, I would just say. And on that note, thank you all so much for tuning in. Like, comment, and subscribe. Join Discord. We will see you all tomorrow. Good night. Bye.